It will feed through into the rest of the economy. It is a market, though, we definitely want to focus on quality in this environment. We probably want to be a little bit defensive as well in terms of thinking about the sectors that can do well in this environment, and wouldn't lean fully into the sectors that are cyclical given the slowdown in the economy. But we still see a broad case for thinking about an extension in the US of the economic cycle, and that's still beneficial for thinking about equities in this market. But again, if you want to have that risk in equities, you want to make sure you have that balance. So thinking a little more of a ballast from coming through from the fixed income side, maybe away from cash in that regard as well.
Okay. So you brought two interesting concepts, quality and defensive, which if we had this conversation 12 months back, that meant large cap tech. What do those two things mean at this point? Is that still large cap tech, or is that something else?
Quality does buy itself towards large cap in the US.
Right.
I mean, the higher ROE, higher ROA, these are the things that you really want to look for. They have those sort of cash flows that are going to be more persistent, deliver on those earnings. And so there is a large cap bias to that. It's definitely not in the small cap space. We do see some issues coming through. But I think even within the S&P 500, you can start to look at other sectors. I mean, think about the performance of the healthcare sector. That's something that's going to come back up. When we think about the performance of the more defensive side, we could look towards more around the industrials, part of the industrial sector as well, to see the performance of that, and even consumer staples to a certain degree, given some of the consumption behaviour that's shifting in the US. So there's definitely opportunities within that. But again, with all of those sectors, you still want to be focusing on the companies that have the ability to protect those margins, have that market share, as we do see those top-line revenue growth coming down a little bit, to really feed through into putting that earnings in the pocket of investors.
Equity markets in this part of the world, so whether that's Japan that's done well, not so much recently, India that's still doing well, China that hasn't done well for many years, what's the advice?
We're still looking very favourably towards Japan at the moment. I mean, we did have that sell-off. The carry trade is, again, another reason the markets are being a little bit nervy today, thinking about whether it's going to go through another unwind. Yeah. We see a lot of that risk coming out over the last few weeks, and so we're still very favourable on Japan, given the fundamental drivers of why we saw the economy shifting, of why we saw the market shifting around corporate governance still being very much there. And then on the rest of the Asian markets, again, leading a little bit away from China, more into the North Asian markets of Taiwan and Korea, we could see opportunities. The manufacturing data coming out of those parts of the world is still pretty positive relative to what we're seeing elsewhere. And again, we are still thinking about that good cycle around the world still being beneficial for the supply chains in that part of the market.
Final question, since you mentioned Japan, one view that's come up recently, minority view, it's not consensus so far, that this long Japan trade is a purely currency, a function of the currency. Would you subscribe to that, or is that something that's a bit too extreme?
No, there's much more to it than that. Obviously, you've seen the economy start to reflate. You've seen weakness in the domestic growth side of things, but that's starting to turn around. You've got wage growth that's moving in the right direction. So there is definitely a structural shift in the economy. And then again, the corporate governance side of things, the improvement you're seeing in there, it has been relatively slow, but we're still seeing good buybacks come through. It's not just about the currency and the export nature of the economy. It is a highly cyclical market, so maybe there's some concerns around a broader growth slowdown around the world, but it is very much a market that's on the change in terms of where we see the outlook. It has had some very solid performance in the past, but we think that's going to continue, and the valuations aren't really challenging when we look at the Japanese market at all.
Kerry, fantastic to see you, by the way, in person. Hit us up next time you're in town. Kerry Craig there, of course, global market strategist at JP Morgan Asset Management. Right just ahead here in shows, we'll be speaking with a South African agriculture minister about why he thinks his country has a skewed trading relationship with China. And skewed, is that a negative or is it a positive spin? More on that story just ahead. This is Bloomberg.
We want to make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last purchase of Blue Buffalo pet products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that most households where most of the dollars go against the pet, but treating. And then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
Power, money, culture. As Linda Aman tells the story of Asia's rise through the people who are helping to shape it. The Serum Institute was a major player in the fight against COVID-19.
We're in a race to procure raw material that was sanctioned.
And now CEO Adar Poonawalla is bracing India for the next pandemic.
I'm not losing sleep over which day and when it's going to come out, but we're definitely prepared.
Latitude, encore presentation this weekend, only on Bloomberg. It's Jobs Day, and Bloomberg has the report under surveillance.
It's from super hot to solid.
This is normal.
I think people underestimate the behavioral aspects when it comes to the labor market.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
So what is bad on September 6th?
Nobody really has a full answer on it.
I don't know what counts as good news these days.
It's a big debate.
The August Jobs Report, Friday on Bloomberg.
Welcome back. So amidst this market rout I think within this cross asset is obviously a drop in equity markets, a rally in fixed income treasuries, a drop, as you can see, in commodity prices. So you have Brent and West Texas effectively trading about 4 or 5% lower than this time yesterday. We're certainly seeing catch up in the Shanghai contract, which is down about 4.5 last I checked. Apart from this, you have a copper story where Goldman had a look at the outlook and the demand curve, and effectively said, let's hit the pause button on the tactical long rally there. There's a China-specific story in zinc, and iron ore obviously is also a China story. We're down about 35% on iron ore prices from the peak just this year alone. Some of the contracts, of course, in Shanghai and Dalian on your screens. Let's bring in our reporter out of Shanghai, Martin Ritchie, of course, our Bloomberg Commodities reporter joining us there out of Shanghai. Martin, let's start with copper, and what did Goldman say, and why did they do it?
Yeah, it's a fairly stark demonstration of the mood change actually in commodities markets. Goldman Sachs, the analysts there, have for a long time been, a big cheerleader for this kind of very bullish copper story that has been trotted out over the past few years. That was predicated on deepening deficits, a shortage of copper because of all this demand coming from renewables, but China has sort of got in the way, and Goldman took $5,000 off its 2025 forecast for next year, which is really a pretty spectacular U-turn for any analyst house to make. It's putting down from 15,000 for next year to 10,000. And they said that simply those deficits that were expected will be delayed because of China's economy, because of the slowdown in the property market, because of uncertainty over growth here. You're just not going to see that same level of demand.
Okay, well, somewhat related maybe, but certainly not everything, is what's happening in zinc. I think that's probably more the metal story and where you are with smelter fees and losses. What's going on exactly there in China, specifically with zinc, Martin?
I mean, as you said, these things are all related. In zinc, what you've got is a situation where the zinc producers, the smelters in China, they're actually losing a lot of money. They're unprofitable because there's not enough raw material around to support their production. So they're squeezed from that side, but then demand on the other side is also fading. So they're under pressure to cut production in the same way, perhaps, that the steel producers are as well. They're suffering losses again because demand is so weak, because the steel prices have fallen. And that, as we're seeing, I know you wanted to ask about iron ore as well. It feeds into that. Iron ore has come down. We're now on the watch for $90 a ton after a brief rebound last week. So all of these things, copper, zinc, and steel and iron ore, are fairly related. They're all tied up into China's demand slowdown, I would say.
Martin Ritchie there, our Bloomberg commodities reporter, on all things, what's that genre? Heavy metal, as far as prices go. Right. Let's have a look at some of the other movers, of course, later on. Things like transport, for example. You have Cathay Pacific and the like, and Singapore Air is also seeing some pressure right now. So more look at some of these pockets of pain in these equity markets this Wednesday. Plenty more ahead.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, being really vocal and being an Instagram activist and talking about something. There's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, created, when you're solving a problem that's real for you and therefore real for the consumer.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Bringing you up-to-the-minute business news whenever and wherever it happens. I'm Anne-Marie Herder in Ukraine, and this is Bloomberg.
Okay, welcome back. You're watching the China Show. So, the big story, of course, that we're continuing to track is what's been taking place, of course, with, it was first Cathay Pacific and, their own Airbus A350 fleet, and now it's come in and sort of engulfed more airlines into the story right now. So it's not just Cathay, it's JAL, it's Singapore Air China have all been, of course, among some of these airlines undertaking other safety checks. Danny Lee, our aviation reporter, is here with us on set to just get us up to speed and how the story has evolved the last 24 hours.
Yeah, so Cathay has found 15 aircraft which needs components replaced, with one component replaced in its A350 engines, and so that's underway. I know 3 have so far been fixed and up flying again. Cathay do expect, though, all of its aircraft to be back flying, the 350 fleet to be flying again by Saturday. Okay. But clearly a short-term disruption from the checks it's made. And the worry that it had spread to the other airlines, the other operators, when it started sharing some of the information around with some of its nearby airlines, particularly Japan Airlines, spoke with Cathay. They said that they're going to be checking their 350 1000 fleet. Singapore Airlines, the biggest operator globally, said it was going to be checking. So clearly the industry has been paying attention to what Cathay has been doing from what is now concluded to be more of a minor issue that investors can largely be more relaxed about. But if you're someone who's invested in Rolls-Royce, that still hasn't erased the £2 billion in pounds in losses that it got hit with when the news first came out a couple of days ago.
Have the other airlines found anything?
So far, no. JAL has actually said that of the 3 aircraft it's checked so far, Japan Airlines, it's found no issues, and 2 more will be checked once it comes back to its base in Tokyo. We're waiting to hear more from Singapore Airlines and obviously from looking at the Chinese carriers and mainland Chinese carriers such as Air China, if they find anything. But so far, across the airlines you are checking, which is a limited number, so far nothing, which is broadly a good thing, I'd say.
Well, yeah, well, net certainly a good thing on aggregate, in fact. Danny, thank you so much. Danny Lee there, of course, with the latest here on the airline story. Just very quickly here, back, from up in the air, back here on the ground or under water. Semiconductors down about 5% on the broader Asia benchmark, Asia Semiconductor Index. TSMC is still feeling the pinch. I think the silver lining really here is we haven't seen an acceleration in losses. In fact, for many of these names, we've started to come off lows of the day. In some cases like Japan, where you have Disco, Advantest, we were down as much as, 8, 9, 10%. So we're coming off lows a little bit. Still, of course, we do have to adjust lower, given what was the steepest drop on the SOX index, SOX, since March of 2020. So if many of you recall what happened back then was when the global pandemic hit and effectively closed shut many parts of the global economy. Very, very quickly here. So we're looking at energy. We're looking at mining stocks. On the back of the previous segment, we talked about the drop in metals, this ongoing drop in oil prices. West Texas has now completely reversed all the gains we've seen so far this year. We now have a 6 handle on the most active contract in West Texas, and we're seeing some of the energy names on your screens. And plus, of course, where you are on things like gold. Zijin Mining down about 5.8%. And very quickly, on this note, if you're wondering where we are on the most active contracts, oil and other commodities coming up on your screens very, very shortly. There we go, on your screens. Yep, 69.83 right now in West Texas. Shanghai crude is playing some catch down about 5%. That's 522 RMB there, a barrel. And iron ore is also trading. There we go. Sub 700 a metric ton. Right, going into the Tokyo lunch break, that's really where I think in many ways you're seeing ground zero in the equity market, and that market actually opened up almost 1,000 points lower, then eclipsed 1,000 points, and has since pulled back. So more on the market rundown and what's taking place right now. We're coming off lows of the day, which is a good thing if you're just joining us right now. Plenty more ahead.
Always on the heartbeat of the tech sector.
Spread across global